Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Professor Martjin Cremers to talk about active share. Hello Martjin.
Hi, how are you?
So the first question I'd like to ask is, what is active share?
Active share is a very basic measure of how different the holdings of a fund are relative to the holdings of a benchmark. So benchmarks have zero active share, they have fully overlapping holdings, right, with themselves. A high active share fund means that the fund invests very differently, that the weights of the fund are very different than the weights of the benchmark. So at very least you know you're going to get something very different.
And your studies have looked at the correlation between active share and performance. What is that correlation?
It's hard to predict performance, right? It's a bit of a fool's game. At the same time, we find one really very strong result, and that is that the low active share funds, so these are funds that have a lot of holdings that are the same as the holdings in the benchmark. They have substantial overlaps. That those funds with low active shares below 60% or so, that they substantially underperform. On the upside, there is much weaker evidence. Active managers have had a hard 10-15 years, but there's some evidence, depending how you look at it, that the high active share managers, even as a group, have performed fine.
Does that mean as an investor I should ignore passives entirely and just go for those high active share funds?
I would say the opposite. If anything, most funds are not that high active share. So unless you know that a fund is high active share, then I think passive is for many investors the right approach. At the same time, I like the core satellite approach, where the core would be passive, but then for the satellite you go wide and you diversify well and you choose high active share managers. Within high active share, what I found is that a certain patient approach works best. And so I just wrote a new paper called Active Share and the 3 pillars of active management. The 3 pillars are skill, conviction, and opportunity. Skill is hard to measure, but high active share means at very least that the manager has the courage of the manager's convictions and a lot of opportunity to actually be different. And so in my view, having a high active share means at least having conviction and opportunity. And in general, it takes a lot of skill to successfully run a high active share fund over a while, for a while. And so on average, we find that the patient high active share managers have done well. That's what I would suggest for the satellite.
It's really about eking out those closet trackers, those people you're paying for active management that are actually doing no better than the benchmark, and being left with pure passive and pure active management.
That's right, especially because many of the low active share funds are not that cheap.
Martjin, thank you very much.
Yeah, thanks for having me.
This is Emma Wall for Morningstar. Thank you for watching.